Rob, good to meet you. We haven't actually, I don't think, done any face-to-face calls or anything.
Yeah, man. Great to meet you. Glad to be here.
Yeah, so Real Vision Crypto is a platform that discusses cryptocurrencies and blockchain technology rather than just Bitcoin education, which is what you and me are more known for. So Real Vision viewers are mostly folks who've come in through the top of like a crypto funnel from the perspective of trading, not necessarily like the Bitcoin funnel from the perspective of saving or investing. And the Real Vision members are usually exposed to the ideologies of cryptocurrencies and tokens as like exciting cutting edge technologies or investment opportunities, disruptive financial inventions, that sort of thing. And so these ideas are typically presented with, like a positive bias from either the people involved with the coins or fund managers who may be investing in these things, or macro traders who are just typically not discussing it from like a skeptical viewpoint. And Rob, you're known for having like long philosophical conversations about value and truth in markets. And you have a deep philosophical framework of understanding why Bitcoin is important. So my goal with this conversation is, one, let's bring Real Vision Crypto audience through a strong logical framework of how to think about cryptocurrencies and discuss whether or not every token ends up competing with each other and with Bitcoin. And two, let's explore the network effects thesis and talk about whether or not anything that currently exists does have a chance of overcoming Bitcoin's network effects. So for people who aren't familiar with you, can you give a brief summary of your journey from coming into the space and where you are now?
Yeah, sure thing. So I've got a background in accounting and finance. I started my career as a certified public accountant, so CPA, doing mostly tax strategies for investment partnerships and high net worth individuals. I then branched out on the entrepreneurial path. I was a career CFO, mostly focused in tech, before starting my own consulting business in 2016. This was right around the time, too, that I started investing heavily into crypto. And 2017 was a bumper year, to say the least. Market was up 1,800%. I became increasingly fascinated with the asset class and launched a hedge fund in the space, and consulting started to focus on that as well. And basically just going down the Bitcoin rabbit hole in real time and in a professional and personal way. And so while operating the fund, my writing and talking about Bitcoin, history of money, economics, even philosophy to some extent, which I think Bitcoin is sort of cultivating its own philosophy in a way. The ramifications of this technology are so significant that it shakes up your worldview in a very profound way. That all became much more popular. So my most recent realization was 2020, which I guess was a wake-up year for a lot of people. I just decided that instead of spending all my blood, sweat, and tears trying to outperform Bitcoin, which was the fund benchmark, that I would focus on what was more meaningful to me, which is the reading, writing, talking about Bitcoin, exploring. The show that I launched is called the What Is Money Show. So we're trying to ask these very fundamental questions that encourage people to think more deeply about life in general, but specifically socioeconomics and history and the systems within which they operate. And that's where I'm at today, just trying to help broaden Bitcoin education and philosophy.
Well, you're definitely doing a good job. You were recently on Lex Friedman's podcast. And I mean, how many views did that end up racking up? Probably 500,000 or 1 million or more. A lot.
I'm not sure. Actually, I think the YouTube had maybe in the ballpark of 300,000, but I don't know about his podcast numbers.
Well, it's a very influential show, and a lot of congrats for getting on there, and you did an awesome job. And we only have an hour today, so I don't think we can go through the full 4 hours of what makes everything valuable. But let's try. I mean, let's see if we can do a 101. So you've previously said that inflation is theft and that Bitcoin is the most superior monetary technology that has ever existed. Eloquently put. I love it. Can you try to give like a 101 framework of thinking for why Bitcoin's the best form of money rather than just a really good macro trade?
Sure. So we start with inflation. Very ambiguous term, very misunderstood even by those who consider themselves adept in the sphere of finance. Instead of focusing on, is it asset inflation? Is it consumer price inflation? Which gets into this arbitrariness of what do you categorize as, CPI? How do you calculate it, et cetera? I just try to focus on fiat currency supply inflation. So you call it USM2 as a rough proxy for the dollar. I not only am, I don't think it's not my opinion that inflation is stuffed. Inflation is theft, and I can prove it to you. There's no willing counterparty to an inflationary currency. Like, given the option, anyone would choose a money that cannot be inflated, which is to say that it cannot be diluted. In the same way you would choose a guaranteed, an undilutable stock certificate, for instance. You want a guaranteed fraction of the total pool of capital you are investing into. So inflation most certainly is theft. It is only possible, specifically fiat currency supply inflation is only possible via a legal monopoly, which presupposes coercion. So that's inflation in a bucket. Money, more generally, why I think Bitcoin is the most superior monetary technology the world's ever had. I think the first realization you have to have is that money has always been a technology. Everywhere and every when it's ever existed, it's been a tool. It's an implementation. And as I've documented in a lot of my writing, people argue about this, but I've narrowed it down to 5 properties. The money needs to be divisible, durable, recognizable, portable, and scarce. Without getting into the detail of each of those, we could just say the most important property of money, what bootstraps it into existence and gives it a store value function, is scarcity. Now, there will be arguments about scarcity because people think, scarcity is not a function of supply, which is true. Scarcity is when demand exceeds supply. That's what gives an economic good a price in the marketplace, is that there are more bidders than there are supply for the thing. So therefore it has a price. But the thing that's unique about money specifically, and why it is always scarce, is because money is a tool that can be traded for any other tool in the marketplace. Or to say that differently, it lays claim to capital. And because humans are socioeconomically unsatisfiable, right? They always want more. Money is
someone's always going to want a bigger stick, right?
That's right. Money is the most apt tool for attaining that more because it is the most liquid asset. So money is always scarce by definition, but what we ascribe or use as money changes based on how well it fulfills those properties. So I've talked and written about this at length, so I'll try to make it quick. Monetary metals are the best, most divisible, durable, recognizable, portable, and scarce monetary technology historically. Of the monetary metals, gold was the most scarce, which is to say that it was the most resistant to inflation. So it was the best store of value of all the monetary metals, which themselves were the best monetary technologies of the time. So this gave this supply and flexibility of gold, or its inflation resistance, is what gave it a store of value property across time. The problem with gold, the technological limitation of gold, is that it suffered in the domain of portability, and that it's heavy, it's physical, it's expensive to secure, there are risks associated with physical settlement, it's difficult to move across space. For these reasons, a warehousing function developed in the marketplace where custodians would take gold on receipt. They would issue warehouse receipts, paper certificates that were redeemable for gold in exchange for custodying the gold. And then market actors were free to trade with these paper certificates that were as good as gold, because indeed they were a call option on the gold custodied. So that was introduced as an augmentation for gold as a technology. Gold was great for holding value across time, not so much across space. Paper currencies fixed that, but they introduced the risk of trusting the custodian. And that custodian over time has become the bank, which has become the central bank, which has always violated the relationship between the number of certificates issued to the gold reserves, the gold held on reserve rather, and then, historically it's been broken time and time again, whether it was coin clipping today. It started out as fractional reserve. We're now in the zero reserve banking system called fiat currency since 1971. So I guess if you zoom out and you just say money, one of the definitions, and there are many definitions of money, is a tool for expressing value across space and time, economic value. Gold was great for moving value across time, but not space. Paper currencies augmented gold to make it great for moving value across space. But because of the risk it introduced and the custodial risk, the counterparty risk, they've proven not so good at storing value across time, especially fiat currency. And Bitcoin is something that is optimized essentially for holding value or expressing value, across both space and time. And that it's pure digital information. You can move it at the speed of light. You can store it in any information-bearing medium. And because it maintains a perfectly fixed supply of 21 million, it optimizes for the store value function across time as well.
Hey, if you like this clip, be sure to like and subscribe for more crypto-related content. Also, be sure to check out the full interview and more only on realvision.com/crypto.